Hi, everyone. Today we're going to look at a company which I think is interesting in the defense contractor space called Lockheed Martin. The ticker is LMT. So my usual disclaimer is that this is not investment advice. It's just my opinion. So Lockheed is a 111 billion enterprise value company with revenue trailing 12 month of about $64 billion. So Lockheed was founded back in 1912, and through the merger with Martin Marietta in 94, they became Lockheed Martin. Their business can be split into four segments. They have their aeronautics or aircraft segment, which comes from actually a long line of iconic and storied aircrafts like the P-38 from World War II, the TriStar commercial jet, the U-2, the Blackbird. Their current portfolio consists of the F-35, the F-22, F-16, and the C-130. That's about 40% of their revenue. They also have the missile defense system business, like the Patriot, which is 17% of revenue. They own a helicopter maker called Sikorsky, which makes both commercial, civilian, and military helicopters, like the Black Hawk, and that's about a quarter of their revenue. And finally through their acquisition of Martin Marietta in '94, they acquired their business around making intercontinental ballistic missiles, like the Trident, as well as rockets. So this brings me to my first reason why I like this company. As you can tell from their portfolio, it's a company with a really high barrier to entry. And obviously they're sitting on the cutting edge of technology with these products. And like take the F-35, for example, it's one of just a handful of fifth generation stealth aircrafts. And it's no wonder that all our allies and our NATO allies are always trying to get their hands on this F-35 aircraft, because there just aren't that many out there. So all that's to say that the revenue for Lockheed comes from these long-term sticky government contracts, and that insulates the company from normal cyclicality that other companies would experience. In fact, when I looked at their profitability going back to as far as this website goes back, which is '05, Lockheed has never had a year where it lost money. So it has positive earnings per share for every year since '05, and even in '08 they had great earnings. So that's a testament to kind of the insulation from the cyclicality, right? And also this company, because of that, this company is characterized, the business model is characterized by really high return on invested capitals, right? There's not that many competitors, and it's in the high 40s. It's actually the highest that I've seen of all the companies I've analyzed on YouTube so far. My second thesis is that it's more of like a macro trend. When you have a rising power like China that is aggressively upgrading its military, as you can see in this chart, there's a good chance that the incumbent power like the U.S. will there will be a kind of an arms race that occurs. Why? Because that's always occurred in history between the U.S. and Soviet Union after World War II, between UK and Germany in World War I. And all that's to say that I think the military spending will benefit a company like Lockheed, who is a defense contractor. So third, let's look at their valuation relative to market and peers. So at 16.8 times free cash flow, I think it's a very attractive valuation multiple. And in comparison to their peers, Boeing, General Dynamics, Raytheon, and Northrop, Lockheed trades at a pretty attractive multiple compared to the other four companies. Now, one side note is that this is Boeing now, but if you look at Boeing using 2018 earnings, then obviously Boeing is a no-brainer, and it's only trading at 8 times. But that's only if Boeing kind of gets their commercial segment in order, because right now it's just bleeding a ton of cash, trading at it's burning $18 billion of cash this year. So yeah, very attractive multiples versus peers. It has a great return on invested capital, as I've mentioned earlier. And I think it's a good segue into some of the risks of investing in Lockheed. The number one biggest risk is you have the key customer risk, because 75% of the Lockheed's revenue comes from U.S. government contracts. So that carries with it some issues. Number one, even if you made great product, let's say the F-35 is the best fighter jet, you're not really able to freely sell your products and gain market share, because the U.S. government just won't allow you to, you need to get approval from the government to sell your products. So that's one con. Secondly, people have been saying that due to the Democrats winning the presidency in 2020, and Democrats being historically not focusing as much on defense, people might try to sell, defense contractor stocks like Lockheed. I think this can actually be an opportunity, because if there's a sell-off in defense stocks, I think this could be a buy for a company like Lockheed, because number one, the mitigant is that the Senate is still Republican, which means that the Democrat doesn't have the Senate and they can't just kind of do what they want. And secondly, Joe Biden, our next president, is not as aggressively anti-defense as Bernie Sanders, or Warren. I think he hasn't really made it part of his agenda to really reduce, defense spending. I think so. I think that fear is a bit overblown, in my opinion. So all in all, I think Lockheed Martin is a company with very attractive valuation. It's kind of standing on the right side of the macro trend, with kind of the rising militarization of China and kind of the U.S. having to respond to that. Also, it has a suite of products that is essentially, cutting edge, and there's basically no competitors. And it's something that has appeal to both the U.S. military and international militaries. Again, the long-term contract is huge. There's no cyclicality really in the business. Also, it pays a very healthy dividend at almost 2.7%, which is much better than cash, right? So let me know what your thoughts are on the company, and please subscribe. Thank you.